Good morning, everybody. Welcome to the Flow Show. We're over another bit of conflict, another 5-minute war. Thank you very much. All done and dusted. Moving on. We have a saying here in the UK, if your name's not down, you're not coming in. Well, that applies to this page that you can see on the screen. Coming soon. We got some stuff going on. And if your name's not down, you ain't coming in. Well, not early anyway. You'll come in later and you'll miss out on all the goodies. So get your name down, find out what's going on, win a TFP account if you're lucky, and we'll let you know what's happening over the next few weeks. Morning, Kay. Another war under the bridge.
Morning, Ryan. Morning, everybody. Yeah, exactly. And reminds me in some ways. I mean, and it's I'm saying it with a touch of sarcasm because nothing is ever good about a war, obviously. It reminds me a little bit of those Fox reporters who were live during the Iraqi war and walking with the soldiers and everything. It looked like a bit orchestrated, this one from one and the other side, wasn't it?
Yeah, absolutely. The end of it anyway, and
Yeah.
yeah, we'll get to that in the headlines. It could be like the other Iraqi war when was his name Comical Ali? Was it the guy? The saying there were no US troops in Iraq, only in the background to see US tanks rolling behind him.
Yeah, exactly.
But yeah, as you say, there is a serious issue here that people have been getting injured, hurt, killed, whatever. And so if that's at an end, then that's the main thing, the main positive we can take from all that. Right, let's get cracking into what else has been going on. Not like there's been that much else going on. Get off on the calendar. Well, firstly, with the German BDI industry, they've been cutting their growth forecast for Germany more and more and more. Their last forecast for Q1 had the German economy coming in minus 0.1% in 2025. Now it's minus 0.3% for 2025. So all the hopium doesn't seem to be passing through to some of these areas. We did get a bit of data out from the German IFO, and that was largely positive-ish. Current assessment went up 1 pip, 26.2, missing expectation 86.5. Expectations, though, so the hopium index went up to 90.7 from 89 previously, though that was an upward revision, and that beat expectations. The overall business climate index came in at 88.4, so that was an improvement over the 87.5 previously. So this one is a bit of a whether the sun's shining or it's raining index, so it can change pretty quickly. But we're not seeing that real hopium coming through in some of these numbers yet, Kay, from all this infrastructure spending and whatnot. And
Yeah. And it all will take time, Ryan, as we know. It's not because you budget for stuff that the bridges, the roads, the ports, the whatever they need to build are going to be there the next day, right? But there is something about the review, and I know, I mean, it's Europe. It's never going to grow at.
oh, you gone?
Yeah. I'm again having a little bit of an issue sometimes with my microphone, and I don't know why. I've checked everything, but I really don't know why. Um, no, but it's not going to come overnight. But and I said, like, maybe we are going to start to see stuff coming through, perhaps from the second half, third, fourth quarter, perhaps even. Because it all takes time to put to be put in place, right? So yeah, I wouldn't rule out that in the upcoming, let's say, half a year or perhaps even stretch it a year, we are going to see some positive effects of this coming into the German economy. We've seen on the equity front people already buying those infrastructure companies. But again, it's going to take time to come down to the street and show us the positives in the real data. But I am kind of hopeful we will be seeing them at some point.
Yeah, we should. Well, we should see them. Whether
Well,
it makes any meaningful.
if we don't, then forget buying euros.
Yeah, exactly. Now, speaking of what they're going to be doing, investing and whatever, and we're seeing a general lift up in bond yields, particularly in Europe today. But Germany's leading the way. Might be to do with they're apparently going to issue 19 billion more in debt than they had originally planned, according to the finance ministry over there. So once the thrifty nation, now they're all getting they're finding all this money coming out the woodwork, or they're going to borrow more money, all at these now low rates, it seems, but not according to yields at the moment. Currently German 10s is up just under 6 pips on the day, as I say, outstripping some of the other European counterparts by 2 to 3 basis points. ECB's Nagel says the ECB is in a good position on interest rates. Another one joining the holiday club, packing the bags, heading to the airport. Lagarde, giving the euro green light again, says the euro has an opportunity to increase its global standing. One day they will want to get that genie back in the bottle. Let's see how far it goes before then. Coming back to the data from yesterday, because there was some data yesterday in amongst all the geopolitical headlines, and that was good US data from the S&P PMIs. Manufacturing rising to 52, coming in unchanged at 52 over last month, but was expected to pull back a bit. Services, that did pull back a bit, though beat expectations, so it wasn't as bad as feared. Still positive numbers, not in contraction, in expansion, which is good news. Existing home sales, that was expected to fall back by 40,000, but instead it went up over last month by 30,000. So housing there doing okay. That was after the slightly softer starts and permits we saw last week. Fed's Bowman, she's on the July cut camp, joining Waller, says we're open to cutting rates as soon as the July FOMC meeting if inflation pressures stay contained. We should put more weight on downside risks to the jobs market going forward. It is time to consider adjusting the policy rate. Trade policy is only likely to have minimal impacts on inflation. Gall's Beast didn't say too much at all, says it's critical to look at soft economic data at the current moment of transition. It's very worried about the stagflation outlook without knowing if it will happen. A bit useless there. Kay Bowman, joining in July camp, putting a hat in the ring, or just taking the dovish side of things for now?
Well, I am tempted to say it's the first option, and I was actually and glad I found it, or glad they commented on it. And I don't know exactly which media it is anymore, but it doesn't really matter. But it does look like Bowman and Waller are both Trump appointees from the first leg, probably still, and so it's somewhere unsurprising that they all of a sudden throw their hat in the ring, but. On the face of it, it is quite a change for Bowman, because she was rather in the hawkish camp, right? Or stubbornly pausing. And for her, it is a real change of tone. So that did not go unnoticed in markets. Obviously, the big headlines being geopolitics, but when she started to talk about July, it did have an effect on the dollar relatively immediately. The let's say the minor part of this whole move, but it is a change from her, right?
Yeah, I did check back, and I might have missed a couple, but I checked back my notes because I keep all my notes from these flow shows. In January, after the December meeting, she said she could have supported no move at that December meeting. Policies not as restricted as others think, and prefers a cautious and gradual approach. Then in February, said she needed greater confidence in falling inflation before cutting rates. So yeah, this has been a definite change. I mean, they can change if they want, but yeah, just coming so soon after Waller, there's a lot of people asking questions about that.
It does look a bit like I remind you I'm here as well, if you want to have a chat with me about the role.
Yeah, it was only yesterday I said, we could be heading to a situation where these Fed heads are going to be maybe getting a little bit political with their comments under the guise of monetary policy comments, but we shall see. We shall see. Two swallows don't make a summer, but they make a party. Anyway, moving on. Economic Director Hassett says Waller and Trump are right about interest rates. So Waller's got some backing there from one of Trump's pals. Germany's Merz, talking about trade, says the EU approach to trade negotiations with the US is too complicated. Says we need an agreement for 4 or 5 important industries such as cars or chemicals, which insinuates that maybe the EU are trying to get too much done in these negotiations, which is fair enough, but get some done and then work on the rest later. We're heading towards that deadline, of course, in July. Right, so let's get into all this geopolitical crap that's gone on. So things ticked along yesterday, same old headlines, threats from Iran, lobbing stuff at each other, blah, 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 blah. And then we got the potential coming in that there was going to be an attack on a US base in Qatar. Iran apparently, though, was kind enough to forewarn everyone that was going to happen. And they apparently only launched 6 missiles, which they said was the same number that the US used. Pretty much all those missiles apparently got shot down. Trump said there were 13, and one was allowed to land because it was going nowhere. So it seemed like we got an orchestrated Iranian attack, i.e. one of those chest-beating ones. Here, this is what we're going to do. You lot can stop it. It's not going to harm anything, but we need to make a response. From that point, we then got a ceasefire, apparently organised by none other than the Nobel Peace Prize nominee Trump, who said that Iran's response was very weak and they thanked them for their early notice. He encourages peace and calls on Israel to show restraint. And then he came out saying that Iran and Israel have agreed to a total ceasefire with a staggered implementation. They said Iran will initiate the ceasefire, followed by Israel at the 12-hour mark, and the war to be declared officially ended after 24 hours. We got a senior official confirming that they agreed to it initially. Then we got the foreign minister saying there's no agreement, but he might not have picked up the phone if Israel had knocked it all out. Anyway, long story short, they basically kept lobbing stuff at each other until the ceasefire countdown began, and then there's still been some accusations of Iran firing stuff after the ceasefire. As I say, maybe their communications aren't the greatest now, and passing word down the line is a bit more difficult. Anyway, as of now, as far as I can tell, there's been no more flinging, so we are potentially at the end. Israel certainly said they have achieved their aims, so have no need to keep continuing unless they are reacting to anything that Iran does. So it's all over bar the shouting for now. Let's hope this peace lasts longer than the proverbial 5 minutes. Markets are pretty much back to where they started, if not better, depending on what you're looking at, which we'll go through shortly. Kate, another storm in a teacup. Is this the end, or are there going to be some more errant things going on?
We can't rule out anything, as we were talking about this obviously in length in our chat rooms. It's an area of the world where rarely things come to peace for a very long time. I do think that the heavy bombing, heavy missile sending and stuff is likely behind us for now. But the worry, which we both actually talked about already yesterday and even the day before, no, last week, is what about all about those sleeper terrorist cells and stuff? We can never rule anything out, and so but I do think that the big part, which was probably the biggest worry for markets, if you bring it back to what we are doing, is likely behind us for now. And again, the markets have seen how it's been somewhere orchestrated, because we were talking about the Iranian response here, but then the IAEA he said, Grossi said that maybe Iran was warned as well, because they apparently moved the most toxic stuff out of the bunkers before they got hit as well. So I mean, that bit is likely for now behind us. But yeah, then comes the guerrilla type potential war, and that, as we know, in that part of the world, we can never say that things are over.
Yeah, exactly. But let's touch wood. Let's hope that that is the end of that little
Absolutely.
spat for now. Although we probably might expect a few other proxies maybe to still get involved. You never know. The Houthis and whatnot has been mentioned. Anyway, market's probably going to switch away from that pretty quickly. We got a bit of US reaction yesterday, but the US session today might be a bit of an add-on. So be careful when those guys get up and about. They may want to react to this ceasefire news properly. So we could see a bit more of a risk-on drive when the US opens up. Now focus is going to shift to today's NATO meeting, in which the US has said that NATO allies have to reach 5% defence spending target, and that Trump will go to the meeting and push members for more defence spending. Germany was out saying it's going to increase its defence spending from 2.4% of GDP this year to 3.5% in 2029. That's below the 5% that Mr. Trump wants. So there's going to be some negotiating today. NATO's RUT says the most significant and direct threat facing this alliance is Russia. If we don't ramp up defence production, our deterrence will not be strong enough. So he's going with cap in hand as always. And the focus is now going to shift probably back to Russia and what they're getting up to. Trump obviously couldn't pass a day without moaning about the Fed. Said the rate should be 2 to 3 points lower now. It was 100 to 200 points lower previously. Now he wants them down 3 points. Hopes Congress works Powell over in his testimony this week. And unfortunately, now that we're not listening to the news of Iran and Israel stuff, we're going to have to listen to Powell 2 days of his ballfest speaking before the Beaks, which is probably going to be really political in nature, more than monetary policy commitments. That starts tomorrow and Thursday. So, yes, 2 lots of Powell testimony. Looking forward to that, like a hole in the head. Gold. Apparently, a net 32% of reserve managers are planning to increase allocations in gold over the next 12 to 24 months, which will be the highest share in at least 5 years, according to the OMFIF data. I can't remember what their name is. I'll put it in our chat room if you want to go and have a look. A net 14% of reserve managers plan to increase their exposure to the yuan over the next 12 to 24 months. That's up from 2% last year. 16% of central banks are expected to increase exposure to the euro over the same period. That's up from 7% in 2024. And 70% of central banks are discouraged from investing in the dollar due to the US political environment, up from 31% in 2024. A huge number. Maybe, Kay, that's something we didn't really think about when we're talking about, this investor flows, that it might actually be something that impacts central bank reserves and stuff.
Yeah. By the way, Powell starts today, Ryan.
Was it the first one today? Oh,
yeah, I know you were a bit downbeat because it would only start tomorrow, but no,
yes,
be happy he starts today.
oh, at least
Look,
it gives us Thursday and Friday off.
Yeah, I think, Ryan, that central banks have a reaction function, not a proactive function, but I think it's been already ongoing, right? We know about investors rebalancing, reallocating, reducing outstandings in the US, increasing them in the Eurozone and potentially UK and other parts of the world as well. But it's already been ongoing, I guess. But in the central bank's case, they can continue on a longer time frame as well because they are not aggressive reallocators, right? Of reserves. I mean, reserves are really what it says on the tin. It is something that you are going to use. In a way also to improve your return on your uh, well, not liabilities, the other side.
Yeah.
But they are probably slower to react. If it weren't be like that I completely agree with it, and it would remind me of something that happened like many years ago when central banks and then especially Russia in those days, who were extremely big money allocators already in those days, they started to sell dollars, but when they really sold the bulk of what they needed to do, we were basically close to the bottom of the dollar. But so in central bank's case, I would assume that we of course they have a lot of money because we have seen that gradually the amount of reserves, because there is so much money in the system as well over the past decades that's been added, the amount of reserves is gradually increasing. But will they won't be aggressive reallocators either. So
Yeah.
I would rather look still to the side of asset managers, pension funds, the ones who are more independent, like the sovereign wealth funds, for instance. You think about the GIC, you think about the Middle Eastern sovereign wealth funds. They will be the more aggressive, in relatively speaking, ones, and continue also to diversify until they are at a level where which is now basically run by models, where their models say like, okay, this is enough now. So
Yeah.
we are going to stop reallocating. But we've seen quite ginormous amounts being mentioned as well, up to several $trillion to be sold in the reallocation process, which is possible because if you think about only the BlackRocks and the Vanguards of this world, they are already managing 10 trillion, and the other one, I don't know, 6 or 7. So even if they reallocate 5 or 10% to a different zone in the world, we're already talking about it over $1 trillion, right?
Yeah, exactly. And it's also need remember that there's different sizes of central banks. You know, a lot of Asia central banks, much smaller, they can move much faster if they so wish. But a lot of those guys, you know, transact in dollars, so they may not look to reallocate or change their reserves up. But it's not something you'll just walk out the door and go and buy euros on the back of it. But it's just another ingredient that goes in the pot as to why the euro may be supported. You know, one of these situations where if we're trading up at 125 in 3-4 months time, you think, well, how do we get up there? Because it's just gone grindy all the way up. That's what flows can do. Flows go over months and months and months and months. They don't just happen for 5 minutes and then stop. So
absolutely, and that is what retail traders sometimes tend to forget, is that those reallocation flows, they think like, oh, all right, euro went up 100 points, let's sell it because it's at a level. No, if the big boys decide to reallocate, it's not going to be done overnight, not even over a week. It's going to last much longer. We don't hear you, mate.
I'm on mute now. Yeah, you've only got to look at dollar yen and what it did. When it wants to move, when things want to flow and change, look at those are the sorts of moves you get. That's what we could see in the euro, and that's why I think the ECB are happy to have the genie out the bottle, but they might struggle to get it back in once it does go. Because if the euro's up at 140 in 6 months' time, they'll be moaning about it. I can tell you that, and its effect on inflation and whatnot. But that's their mess to deal with. Right, that's it on the headline front. Have you got anything else, Mr. K?
All good, mate.
Good. Right, well, where are we? Well, I might as well start on dollar yen while we're here. Completing the big reversal and a bit more. This is a difficult one to look at because you think, take away all the Israel-Iran stuff, that all started kicking off around the 12th, 13th of June, which is back here. You could say, well, the price might come all the way back here because that's where it was before. But there's other factors that have been playing in this uptrend. A bit of a messy one, but it's still an uptrend off that April low. It's still valid. So there is potentially room to see a lower dollar yen. But I would keep a close eye on this 144 down towards this trend line because, we have been respecting it, even with the odd blip. And when it's crossed over and confluenced with other levels, it has shown up. So we could see a bit of a further pullback, but I don't think this would want to stray too far unless the market's suddenly getting all dovish over the Fed in July after these Fed heads. But we'd already seen a bit of a turn in the dollar since then, hadn't we? No one was really flooding out of this one much anymore. What's your take on this one today?
Well, I was looking at that move, and then I was looking at oil, and I said, like, "Whoa, this is a near perfect overlay." It's always difficult to know which bus a currency is on, but if you look at the U.S. Oil, what it did over the past few days, it's spiked higher, and then we crapped the bed again. Look at dollar yen; it's done relatively the same. So we know that Japan is still a big importer of energy, but we've also spoken about those the market being long yen, and they've probably been taking some of them probably been taken to the cleaners as well, and then those flows dried up, and we came back down in sympathy with the rest of the dollars. It's been extremely difficult to trade yen on risk if you're not trading crosses. The crosses have been trading the relatively speaking the positive risk. Although we did the top of euro yen yesterday, and today oil crapped out, and we are still lower in euro yen. But it's been I think just a case of it doesn't go one way, it goes the other. And I do think that yen longs have been taken for their stops, and now we are back to a more perhaps neutral level around this 145. But I would argue that on the crosses side, I think anyway, I'm going to be looking at if we get more. Down to that white line already. That would be interesting. If we get more consolidation or correction, because I think the whole picture isn't done. We are not done with this euro yen. Especially if I'm right, also saying that the reallocation into euro may not be completely over, because I do think that some of it has to do with with quite a few currencies actually, but with the yen as well, because we know how active Mrs. Watanabe nephews and sons are all the time. So I'm looking to buy euro yen on a dip.
Yeah, it
I don't
still seems out on its own, doesn't it?
Sorry,
Among the
mate.
crosses. It still seems out on its own, euro yen amongst the crosses. You know, it's not even really pulling back much compared
Yeah.
to what some of the others have done.
Yeah.
And that's the weather vane traders need to lean on. You know, you need to look for these little clues. Okay, you may never have traded euro yen in your life, but you need to know what it's doing because you know dollar yen's pulled all the way back to where it was before. Euro yen hasn't. It's staying afloat, and we're seeing the euro bid ups again in euro dollar. But you know, compare it to others. You know, Guppy hasn't pulled back much, but it didn't do much in the first place compared to some of the others. Aussie yen pretty much the same. It's in a downtrend, less reaction here over all the risk stuff that's been going on. So, you know, you can get your clues. It's like I always say, you look at the crosses as a weather vane to see what's driving what. And you do that when you're coming in the morning. First thing you should do when you're coming in the morning, if you trade euro dollar, is look at what the crosses are doing. Look at what euro sterling's doing, what euro yen's doing, because then it tells you what's moving, what side of euro dollar. Is it the dollar or is it the euro? And quite clearly, right now, it's the euro that's doing a lot of the driving in euro dollar. And you pick those clues up. It helps you with your trading. Anyway, back to dollar yen. I'm having a little nibble down here at the 145. It's my zone. We've had a big old round trip. If it's going to hold or run into trouble somewhere, this is where it may do it. So I'm giving it a small long. And if we're under that 144.90, then I'm probably going to get stopped. But you know, that's trading. I'm more inclined to trust my coloured lines today than I was yesterday. I had no interest in trading it yesterday. Aussie dollar, I've stepped out of my longs, which obviously, with the benefit of hindsight, looks like a crap move. But yesterday, when it was crap in the bed, I didn't care. I wasn't interested in riding the risk. I didn't want to be another 100 pips lower and decide I'm going to get out. So fine, I'll sit on my hands and pick up the pieces today. Today, I might be more inclined. I'm still running my buy stops. We've still got the levels in play up above here, 65, 35 to 50. So that's a big, big level. If we manage to break that today, it could be a bit of a runner. Or else I'm just going to see if these levels reassert themselves and then I'll start trading it again if I so wish. But I'm more inclined, as I say, trust the text today than I was yesterday. Dollar Mex as well. Been running that one pretty, or commentary on that one pretty incessantly. Hopefully not boring you, but 119. That's my important level here. We had a new low since the last one. Yeah, 1901. It was 1902 first thing this morning. So this is potentially going to be an important line right now. So if you're trading this one, watch this very carefully. If you can't break it, it may be signaling we've got a little bit of a turn going on compared to the trend that we've been seeing all the way since the 21s. Oh, what's going on with my charts today? There we go. This big old move down here. Okay, this might be signaling that we're turning around. If we break here, though, we have to knock out that double bottom down there. That's the line in the sand. If we can't take that out, if we get a third bottom down there, and it might pull up short 85s, 88s, again, that will be a bit of a signal that we are bottoming out, and then we might be looking the other way. And as I said in our chat room, as much as I'm sort of making a case why this price might be going up, that's not my bias. I'm still short. So I'm making sure that I can read the signals if my trade is going to start turning around and going the other way, because that's just as important as being in a trade going the right way. You've always got to know where your risks are and what can go wrong, not what can go right. Quick butchers at the euro. Have we made a new high? Nope. So this is pretty similar to yesterday when we were doing all this. It was, can these moves continue? coming into the new week. We're breaking down, but can it continue? Can it push on? It can't. Okay, that's your first signal. The same question today. We rallied all the way back to 116. Can it now go on and break through this highs and continue? And for now, it can't. So what's going to happen? Is it out the woods? We've had a half test down here. I was looking at this morning to say if we get a pullback to here, watch this level around 1570s. Because if it holds there, then it keeps the possibility of a break very much in play for today. At least if we're breaking back under there, then we may be setting up for a bit of consolidation. We need to see what levels are going to show up again, particularly the 115 on a retest. But if we're staying above this 115.70 today through the US session, then I think a break is on the cards, and then we probably heading up to 117. I know you've been getting in and out and in and out and in and out and in on this one. What do you see now, Kay?
Yeah, I'm low. But again, and I was fortunate to get it relatively early on the open on Sunday evening. Although there was a second chance yesterday at the New York Open as well to buy that euro. But yeah, my overall bias still hasn't changed. I think we are going to sooner or later see that moving up into the 117s, and then we will reassess what's to be done, because yes, now all of a sudden people who would never buy euros before, now the 125 140 calls are starting to roll in, and we know how those things tend to end up one step at the time, as I always say. If we get up to the 117 40 70s is where I'm at. We will have a look at what's going on, and then obviously we got that 120 is going to be very psychological if we get there. Well, my view is still that we get there, and it is not because of the ECB allowing it to happen now, but that also is a change of tone compared to what they usually do, because I think that they finally understood that inflows are good for an economy. So even if it pushes your currency up, that's not the only reason. I think there is all of course this still ongoing doubt about what's going to happen with the U.S. fiscality and other things, and yeah, so I still think that the euro, all in all, is on its way higher, but one step at a time, as I always say. Huh?
Yeah, absolutely. A nice trading that one yesterday, mate. Right, on just looking at the clock, I'm going to run it over to you, mate.
You know, we could show every single currency, every single pair today, and it's roughly going to look the same, because we had that big reversal in risk, we had that big reversal in the dollar. Just going to show a couple, because they, to a different degree, they moved obviously, but they're all, most of them, and Ryan just showed the euro dollar as for a starter. Dollar yen, due to the crosses, is perhaps more still somewhere around the middle of the big range, but euro dollar is at a resistance. Cable is at a resistance. You look at Aussie is not that far away. You look at the Kiwis is going to be there again. But one interesting one here too, and I would like to have a little special mention about the cable today, because we've seen it start yesterday around. We were thinking about, it was maybe a 1 p.m. London fix or so, the old ECB fixing starting to lift the cable, but it really started to go from around those lows, really, and it started to gradually ramp higher, and it's never really looked back, and that was very interesting, and that is straight away going to reply Ali's question, because Ali, you are in euro sterling. I think sterling is a risk currency, okay? It is a risk currency. For those who may not know it, or are new to trading and who trade like cable and stuff based on the dollar, sterling is also a risk currency. When risk is doing well, sterling is usually doing well. And that replies your yes, Brian, as I'm pleased to say, it's also an emotional currency, especially when it goes down, really. But that replies your question on the euro sterling, really. Why is euro sterling lower today? Because risk is doing better, and sterling made a comeback, and it actually started yesterday already. And now we are here again at this. It's the top end of a trend line. It's been trying. Well, this was a little under 136, but here 136, there 136, there 136, and we are here again. And it is looking big, but it was looking big the other times as well. But this looks a little more explosive. And what's going to happen if we get through there? There is prior highs, prior lows, and stuff around here, and yeah, I mean, people are going to find levels every 10 pips, but I think the next zone here is 134.40.70. If this breaks 116.30, we could be 136.30, sorry, we could be really quickly up into that zone, okay? And it's probably going to go faster if it goes. It's probably going to go faster than the euro dollar maybe because of the liquidity side of things. But I compare it a little bit to that 117, 40, 50 zone in euro dollar. Once it gets up there, I think we need to have a bit of a think. Of course, it can fly through straight away, and we trade up to 140s. But I guess it's going to be reflection time if we get up there. Yes, higher, higher. And look at this. This is still pretty impulsive of what we've seen. Now, if you look at from the start of 2025, this is still looking quite impulsive. It does feel to me at least that it's a matter of time we are going to go for that level. And why is it also an important level? It is because it's the halfway. Oh, where am I? Yeah, it's the halfway point of the 2014-2022 dump, although that low here is always debatable, but it's somewhere around the halfway mark as well of this 10-year move, okay? And that's also going to be important. That is why I'm keeping a very, very close eye on if we get there, what's going to happen with the cable if we get there. Yeah, so this euro sterling, I'm really not sure. We had two looks, even tried to keep around 84, 85 and a half, 45, 50 there. It's not holding. I'm not a buyer right now because of that risk play going on, Ali. Okay. In cable, I think I think it's sooner or later going to go. I just forgot to show the intraday supports. I bought it yesterday as well. I'm going to be looking at if it returns down to one lower 115s or even already around, I think I've had something around, yeah, here 135 55 60. If we get down there, we're already going to have a look at what's happening, but this is now the 135 10 15 is going to be a relatively decent support unless the dollar finds its mojo again, obviously. Kiwi was also one of those big ones. We dipped very briefly below the 78.6 and then ramped higher really without too much of a pause. And now we are back in this 60, 30, 50 zone where we need to make a decision. Okay, it looks very impulsive. It feels like we are going to go for a retest of the highs. But again, as we were saying at the beginning of the show, the zone, the geographical area where things are the most present now, happening. This does it ever stop? And that's the big question that we have now. We are never too far away from an adverse headline. And as Ryan rightly said, those NATO meetings, okay, because if Trump now is going to be feeling very confident because he had this ceasefire and bombing victory. He may go to the NATO and try again to tell the whole world what they have to spend. And if it may even be a smaller country says I can't reach it, he may threaten again to leave the NATO, and then we may have an inverse impact as well on the currency pair. So do not completely dismiss those NATO headlines, although they are not the biggest ones, but we know that surprises are never far away with the orange hurricane. Okay. And then you were asking about gold, and I will stop it there because looking at the time, and as I said, we can look at all of them. You know what I say about this. Gold is a hedge against everything that can go bad in the world. Okay, it's not only worse. It's wars. It's inflation. It's lower growth. It's lower interest rates, etc., etc. But we see, although the short end came down, the more longer end hasn't moved a lot, but it lost a little bit of its safe haven status. And I've been saying that repeatedly over the last shows. There is a chance, or there is a risk for those who are long. There is a risk for the other ones. Maybe an opportunity as well if you traded it on the short hand because of the less need for that hedge. We need to be a bit patient with this one. I am going to be, at least. I don't know what to do with this one. It could go down to here, could stop somewhere in the low 33s, could stop around 32.90 again, 32.70, who knows. To me, the biggest support comes in around 32, give and take 30.40, and that's where I'm going to have a close look at it. It's also around this prior low. If ever we get there on a continuation of less need for that hedge, I wouldn't let it go as far as this one, but I think if we get back above 33.75, it may mean that this consolidation correction is already over and we are going to grind back higher. But for the time being, I've been talking about positioning. I've been talking about you can't the species. Central banks is a different thing. But the speculators, you can't just continue to buy the hedge because you're a speculator. You take a position with whether it be half leverage or 20 times leverage. Once your position is in place, your position is there. And that's what I said. On those blips higher, it does feel to me like some of those speckies are happy to take some profits and let some go. I think we may still be in the same pattern, but high is a bit lower. If though we break back above 33.75, we may start to push higher again. But until then, I'm going to leave this one alone and allow for some more consolidation, even correction potentially. And with that, Ryan, back over to you, mate.
Thank you very much, Mr. K. Wonderful stuff as always. And yeah, that's it for today. Thank you very much for coming to the Flow Show, supporting us here. Don't forget to give us a retweet when you see the tweets go out. Don't forget to sign up our Coming Soon page as well. Have a great day, everybody. Try not to sleep through POW. And I might take tomorrow off, Kay. You can do the POW review.
Yeah, no problem. He's just going to repeat what he says today, so you can do that one. The fun thing is probably that Trump is going to shout louder on Truth Social than Powell is speaking in during this testimony.
Absolutely. I look forward to it with bated breath. Anyway, have a great day, everybody, and we'll see you all.